Coming up this week, we're going to be taking a look at the latest swap rate chart from yesterday evening and what that potentially means for interest rates going into 2024. We're going to be taking a look at the nationwide house price index, which was released this morning, covering the month of November. We're also going to take a look at the nationwide annual house price review. And then lastly, we're going to be taking a look at the potential of a spring budget coming in March of next year. So welcome everybody to the UK Mortgage Market Insights for the weekend in the 29th of December 2023. I hope you're all well. So you may well have noticed from the opening titles that this week there's not going to be any review of lender rate reductions or lender criteria changes. That's because there hasn't been any in the 1 week of the year when not a great deal of things happens between Christmas and the New Year period. So nothing to report on lender rate changes or criteria changes. So let's get straight on with the nationwide house price index then. As you can see, house price recovery continued in November according to the nationwide. UK house prices rose by 0.2% in November. That's down from a 0.9% increase in October. Compared to a year ago, prices are now down by 2%, meaning that on average, the UK house price is now around about £258,557. Annual growth has remained weak, but it is now showing signs that it is the strongest since February of 2023. And if we then look straight at the nationwide annual house price review, you can see that they are reporting a rapid rebound in house prices being unlikely in 2024. So despite the positive monthly change, Nationwide are suggesting that in their belief, house prices won't rebound too quickly next year. The housing market in 2023 has been weak because of the cost of living crisis and affordability issues due to the higher interest rate environment that we've been in. First-time buyers are buying, people haven't been moving, and even remortgages have been extremely difficult. As we've got towards the end of the year, things have vastly improved, and we will come on to that later. But generally, during 2023, the housing market has remained really weak. And there is the expectation that in 2024, we're either going to continue to see some very slight declines in house prices or at least remaining broadly flat. So a subdued picture on house prices. So moving on to swap rates, and this chart is fantastic news. If we focus on the current column and we look at the 2-year and the 5-year rates, we can now see that both of these are showing below 4%. And this is a real strong indicator that the markets are believing that the base rate is going to be lower moving forwards. As you can see, this chart was updated yesterday evening at 11:30, so it is currently the latest chart available. I strongly expect that as we go into 2024, lenders are going to start releasing most 5-year fixed rates below 4%, because you can see at 3.318, there is a lot of margin there for lenders to price below 4% across a lot of the loan to value brackets, and to also hopefully in people that want to remortgage as well as those looking to buy. For the 2-year rate, we're heading into the territory where we might start to see 2-year rates dropping closer to the 4% bracket, which again is great news for people that want to go for the shorter term fixed rates in the belief that rates are going to get lower in the coming months and years. So really positive signs in the swap rate market. Like I say, we haven't seen any lender rate reductions in the period between Christmas and the New Year, which isn't unexpected. But I do fully believe that lenders will start January with some announcements for some rate reduction. And then moving on to the possibility of a spring budget in March of next year. So there has been a report that there will be a budget on the 6th of March. And the Times reported that the government are expected to introduce some policies to help first-time buyers in the spring. Now, I would love to get your thoughts on this, what you think might be coming from the government, or even what would be worthwhile coming from the government. But the policies that have been suggested have been things like much longer term fixed rate mortgages to reduce how much first time buyers must find for a deposit, therefore improving affordability, because such schemes are available in the United States where we do see lifelong fixed rate mortgages. As I've reported in previous videos, there is a new product coming to market in January of this year from a lender called Perenna, which is going to be interesting. And when that is released, I will obviously let you know. But other things that the government are considering have been things like resurrecting the Help to Buy scheme and potential stamp duty changes. Although I'm not sure what stamp duty changes they could make, because even now, first-time buyers, if they're purchasing below £425,000, don't have to pay stamp duty anyway. But what do you think? Do you think that the government should even be interfering with the housing market in this way? Do you think it's just for votes? Or do you think it genuinely is because they are concerned that people are not being able to get on the housing ladder? Please do leave your thoughts in the comments. I'd love to hear them. So that brings us to the end of this week's episode. So thank you for watching, and I hope you found that useful. Just a reminder that if you are watching on TikTok, Instagram, or Facebook, then the links to the relevant articles will be in the comments. If you're watching on YouTube or listening on Spotify, then the links to the articles will be in the show description notes. As always, do appreciate your support and your comments on these videos. Thank you for interacting. As you know, we are on TikTok Live on Tuesdays and Thursdays of each week from 6:30 to 8:30 in the evening, answering any questions that you might have. And we will be back doing those from the first Thursday in January. So please do look out for those. Once again, thank you for your support. And all that leaves me to say this time round is have a fantastic new year.